Boeing shares have been on the move today. In fact, they're up by about 5.25% right now. The aerospace giant reporting a smaller than expected loss and higher than expected revenue. For more on these results, we want to bring in David Strauss. He's Barclays senior research analyst covering the U.S. aerospace and defense industry. And what do you think? This is obviously some good reaction from the street. What stands out the most to you, David?
Yeah, definitely a step in the right direction. The main thing is that the cash progression was better than expected. The company had forecast about a $4 billion cash usage back on their Q4 call in late January, and it came in closer to a $2 billion burn. So obviously, the cash progression, eventually getting to cash positive, is the most important thing for Boeing. So that's really what stood out.
Obviously, they have been front and center in the trade wars, with China saying that they will no longer be taking delivery of Boeing planes. Here's what the comments are from the CEO on this. While we are closely watching developments in global trade, our strong start to the year, demand for airplanes, and $500 billion backlog for our products and services gives us the flexibility we need to navigate this environment. Where do you come down on how the trade wars will impact this company?
Yeah, specifically with regard to China today is about 3% of Boeing's backlog. So it's a much smaller component of the backlog than it used to be. So I think with respect to China, it's fairly manageable. If ultimately there are retaliatory tariffs and 80% roughly of Boeing's airplanes are exported to the rest of the world, that would be certainly more problematic. But specifically with China, I think it's pretty manageable, just given the small size that they are today within Boeing's backlog.
They say they're still anticipating the first delivery of 777-9 in 2026. How important is that? How important is it to make sure that they are meeting the expectations for deliveries beyond that?
777X is really important. Today, they're building airplanes in anticipation of getting certification and delivering that in 2026. So they're burning a lot of cash on that, probably somewhere in the order of $4 to $5 billion in cash this year, because they're building and not delivering. So in terms of the things that are most important to the cash progression here from where we are today, certainly MAX deliveries continuing to ramp up. We're at around 100 deliveries per quarter right now. There's certainly a lot of room to go up there. But I would put next on the list really 777X, getting that certified and starting to deliver, just given the cash burn associated with producing but not delivering any of those airplanes yet.
David, what's your rating and your price target on the stock?
Sure, I'm at an overweight, $210 price target. We had been equal weight on Boeing up until early this year. We turned positive early back in January. Really with regard to a couple things. The first, they raised equity. The cash that brought in took kind of the balance sheet from being an issue over the near term. That was number one. And then second of all, progression on free cash flow. We were more optimistic there, and certainly the change in management and our confidence in Kelly Ortberg moving things in the right direction.